Okay, I'm just going to talk very briefly, you'll be glad to hear, about IR35 and some other tax areas. So IR35 you'll have heard a lot about lately. You'll have received lots of communication, I dare say. The legislation itself is not actually new. It was actually introduced originally in 2000, and it was introduced to prevent disguised employment. Now what that means is where it applies typically is where individuals who are, so locums for example for yourselves, are no different than salaried GPs but are operating via a limited company, their own personal company. They're doing that because then they are benefiting from the reduced tax and national insurance that they can achieve by working through a limited company. So this is where it was introduced. So what's changed from the 6th of April 2017 is that for public sector businesses, it's now your responsibility to assess whether those individuals are actually falling under IR35 or not. Previously, it was down to the individual locums via their companies to assess whether this applied to them. So that's what's changed, and that's what you've all been hearing about from the 6th of April. The first question that we've been asked is, why does it apply to GP practices, your privately owned partnerships? The answer is it does apply to you, and what the legislation actually says, it's public authorities as defined by the Freedom of Information Act. So GP practices with PMS, GMS contracts, it does apply to you, I'm afraid. It doesn't apply, however, to locums that you use that are self-employed. So it is only where you engage them through a third party, so typically through their own limited company. So if you've got self-employed locums, you can not worry about IR35 legislation. You still need to assess, as has been the case for several years, whether actually should they be employees or self-employed, so that still applies. But actual IR35 is only where they work typically through their own personal limited company. Now there's an HMRC tool that is available, and the details are there on the slide. You need to use that tool for each engagement with a locum via a limited company. So it's not each limited company, each locum, it's each time you actually engage that locum for a contract. You need to use that tool, and if it turns out that they fall under IR35 legislation, you have to put them through your payroll. So you have to deduct PAYE, national insurance, and pay the net amount over to those locums via their companies. Now, one thing that then has a knock-on effect on is employers' national insurance, that because you're running it through the payroll as if they're an employee, you will have to pay employers' national insurance if their earnings are over the limit for that. The guidance, because you'll have locums coming in, you won't have a PAYE coding notice for them as you would for employees. The guidance is that you deduct basic rate tax from those locums via companies. So clearly that's probably not right. It will be higher rate tax they should be paying, but the guidance is deduct basic rate tax and national insurance, pay the net amount over to the locums. If you don't comply with this legislation and HMRC do a review and discover that someone does fall under IR35, you as practices will have to pay the PAYE, the national insurance and penalties. So it's an expensive thing to get wrong. So the important things from this is to remember it's not your self-employed locums, it is only those via companies. And also when you're agreeing rates with the locums via these companies, you'll need to bear this in mind, that you've got extra administration and employers' national insurance that you'll have to pay.
Sorry, can I just check? I have an issue with a locum telling me that they're self-employed when they might be working through their own company.
Okay.
So checks and balances.
If it's via
to get like the flat rate national insurance proof from them to prove that they're sole traders.
If they're actually sole traders, then this legislation doesn't apply. It's only if they're actually doing it through their own company. So it depends who you're paying and who you're actually appointing.
But if we just pay them, they might be a limited company in their own name. We won't know any different. So you should get some, yeah, because the onus falls on you. If they're doing it through their own company, you are responsible in the eyes of HMRC. Self-employed people have started their own companies just in their own name, haven't they?
Okay, but they should, in theory, they should have a limited on the end. But, but yeah, so.
Do a check on companies
You could check. Yeah.
And if you can't find
and if
their
it
name,
comes up with his sort of name, then
we could assume that.
Yeah.
Yeah.
Yeah. But yes, it is worth clarifying. If you're unsure, the responsibility falls on you, so it is worth.
Exactly. I'd rather have a piece of paper that
Yeah.
proved that we couldn't find them on, on a
Absolutely.
company, okay, thank you.
Okay.
they can use the locals as a sunset
Yeah.
local.
Yeah.
Should they sort of flag in these sections, sorting it all out?
If you're employing locums through agencies, it's the agency that should be responsible for doing these checks because they're the ones employing the locums. But in reality, they are likely to ask you, what's the contract, what's the terms, and be looking at things like that because the locums are working directly with you. But the responsibility falls with the locum agencies. Okay. So it's only if you're employing them directly. Okay. The other area that I just want to talk about is making tax digital, which may not be quite so commonly known about. There's limited information available at the moment as to Sorry,
just on previous point,
Yeah.
we will actually pay the locum GPs direct, and therefore the locum agency could say, actually,
Right.
responsibility is transferred.
Yes, yeah.
Could they?
Yeah, they could do, yes. Yeah, so in that instance, you need to assess it. There has been talk as well of we do just apply if you're employing a locum through a limited company, let's just apply it to everyone and then we know you're covered. And HMRC has said, no, you can't do that. You've got to assess it for each engagement individually. I mean, a lot of locums, it will be okay if they're not employees. It's the ones where they're doing regular days, and there's a lot of terms that you need to look at. I'm probably talking to a lawyer who specialises in these agreements. Actually, it's worthwhile to have something in place with the locums so that actually it's extra backup. Okay. So making tax digital. There's limited information available at the moment, really, as to how this is going to work, and it's changing constantly, actually. It's being piloted at the moment by HMRC and some businesses, and there are lots of consultations, and it's changing quite frequently. So it may change further, we'll see. But at the moment, HMRC are saying from April 2018, all businesses with a turnover in excess of the VAT registration threshold will have to report quarterly to HMRC. The reason for doing this is that they want to introduce individual accounts for each taxpayer that gives them real-time information of what their actual tax liabilities are going to be, so that there are no nasty shocks come January each year. By 2020, this will be rolled out to all businesses. Now, the fact that it will give you real-time tax liabilities, as you can imagine, probably isn't the case and could be more misleading than actually having an annual tax return. But what the aim is that information that's held centrally by HMRC will automatically feed into these tax accounts. So employment records, bank interest, pensions, child benefit. Apparently, all of HMRC's systems are going to talk to one another and actually work together. So we'll see. As you can appreciate, for complex partnerships such as yourselves, in reality, as you go throughout the year, it's not going to give you an accurate tax position. You get a lot of your income paid in arrears. Half the time you don't even know what you're earning till halfway through the year. So how you can report it, how do you know? On a quarterly basis, there won't be adjustments for tax allowable expenses or income and adjustments for things like that. And it's highly unlikely that it's going to cope with your complex prior allocations that you have in GP practices. So we'll see. So I think the important message is, when this does come in, educate the GPs that actually that is not their tax liability. It will change and it won't be accurate. There will then be a final end-of-year adjustment that needs to be done. There was some debate as to when this was going to be. Initially, it was going to be the 31st of December, so no accountants were going to have Christmas under the new rules. So they changed that, so it's within 10 months of the end of your accounting period, or the 31st of January for the tax assessment period, whichever comes first. So what that means is for non-March year ends, it probably brings forward the time that you actually have to report to making tax digital. For non-March year ends, it's not been clarified, but it's likely that it will be implemented from the start of the accounting period after April, because if you start from April, that's not your full accounts year for the tax period. But again, that's not really been clarified. what is important, and the message really that we wanted to get across today, is it's important that you keep your accounts records up to date. If you are currently VAT registered and you report quarterly anyway, this isn't going to have a significant impact. You're going to have to report a month after each quarter. You'll have to report this information. You do that for VAT anyway, so hopefully it won't be too onerous. If your bookkeeping is a bit more ad hoc and you do it as and when you have time, or even at the end of the year possibly, or at various periods, you are going to have to change the way you do it. You are going to have to report quarterly, so you're going to have to look at, do we need extra hours? Do we need extra staff? Do we need to outsource bookkeeping? Because you will have to report quarterly, and there will be penalties if you don't report quarterly. They've said for the first year they'll be fairly relaxed with the penalties, but after that there will be penalties for not meeting those deadlines. Now, having said all this, as I say, it's not set in stone at the moment. The House of Lords have advised HMRC that they don't think they're ready to cope with this. They don't think businesses are ready to cope with this, and they have urged that HMRC defer it all until 2020 for all businesses. But whether that will happen or not, we'll see. But watch this space. We will keep you updated of what changes and help you to be ready for when this does come in. But I just want you to be aware, and if you don't regularly do your bookkeeping, you need to be thinking about making changes now so that you are ready when 2018 comes. Okay.